So I guess it's the perfect time now to introduce our first speaker, Steve Kell. Steve comes to us with a wealth of grain marketing knowledge, and I thought it would be very valuable to have him impart some of that wisdom on to us today. We always focus on excellent crop production practices, but it's just as important to understand what to look for in grain markets in these uncertain times in order to hopefully make wise business decisions for everyone's farm businesses. So Steve, the floor is yours.
Okay, can everybody hear me? I just need to start my slides here. There. Okay, can everybody hear me okay? I'm hoping so.
Yes.
Yep, we can hear you,
Okay,
Steve.
good. This is the fun. When you're in a room, you can make eye contact and you know what's going on. But so what I want to do is talk a little bit about what's going on in the grain markets right now. The interesting part about December is that there's a few major market forces that are just beginning to unfold. So I'm not going to spend too much time talking about what happened, but what I'd like to do is draw everybody's attention to the things that are going to make the markets and make the prices for us in the next 6, 8, 12 months going forward. So that's how we want to approach this. And I would suggest, working on Zoom is a little bit like talking in a closet. So if anybody has any questions, as long as it doesn't create chaos, if you want to unmute and just ask me about something as we go along, I'm perfectly okay with that. So to start off, gotta get my next slide moving. There we go. So here's the corn crop based on last month's USDA report about how much corn North America produced in the 2020 growing year. And the reason I like looking at it like this is it gives you some sense of perspective as how big this crop is relative to other years. And for all we've talked about the weather over the course of this summer, this is actually the third biggest corn crop. It's pretty nearly in a tie for second, the third biggest corn crop that's ever been produced in the continent of North America. And we need to keep that in the back of our minds, not because it's really critical, because, it's kind of interesting, as we've gone through harvest this year, prices have gone up. And so in the back of your mind, at least in the back of my mind, you're thinking, well, maybe it's not all there, right? Something must have gone wrong for prices to be rallying during harvest, but this is still a pretty big corn crop. And so what the driver then is do we have enough demand to grind our way through all of this corn? So here's where we're at in terms of the corn crop right now. And this is from the November USDA report, but the way that the American government projects crop size is what they call trend lines. You can see a background line in that chart there. That's yields go up roughly a bushel an acre a year. And what's interesting about through the summer, we planted corn right across North America, certainly in this part of central Ontario. We planted corn pretty early this year, went in pretty good condition. And so early in the year, we had extremely good crop condition ratings, and the USDA started to push yields up. So if you look at the time reports, they were estimating 178, 179 bushel per acre corn yields for the continent for the year. And then in the November report, for some reason, they dropped it back to 175.7. And 175.7 is a significant number because what they did was they just put it back on the trend line, which it's the number they had before anybody had planted anything. And it leads you to believe that yield might not be what they had anticipated earlier. To simply go back to the default number is a curious thing for the report writers to do. Now, in another week or so, we're going to get the December report, and they're by then should have measured yield data, and it'll be interesting to see if they continue to adjust it down or whether that's what we've got. But the crop certainly didn't turn out to be quite as big as people were hoping for or people had started daydreaming about in July and August when things looked really good. I know I fell into that trap myself. I thought I was looking for the last 10 bushels an acre when I finished combining. So, you know, who knows, but a little bit of that gone on a grand scale. Now, here's what's really driving the corn market, and that is export sales. So this graph shows the price of corn loaded on ships in kind of the 4 major international sourcing markets. So there's Argentina, Brazil, the Black Sea, which is the Ukrainian ports, and the US Gulf price of corn. And as you can see, like this chart starts way back last October, and it was a pretty boring year for corn prices. Then all of a sudden in September, and we saw this in soybeans as well, prices started to move up and move up really quickly. So what's happened is that the world market for corn superheated in the fall, right in harvest, when you would have expected it to drop off. All of a sudden things have heated up. It has to do with the weather in South America and the potential that there could be crop problems in South America. So, but certainly, you know, if you do the quick math, right, corn on a boat at $220 or $230 US per metric ton means that in Canadian dollars, corn right now on a boat is somewhere between $285 and $300 a ton. Now, that's significant for us as farmers in Ontario, because even if we're not selling into the international export market, our domestic users, so if you were going to sell it to, you know, Newland or Wallenstein or Floridel or one of those guys, they have to pay enough to keep it here, right? And so that's how we've gotten this big pull in prices. Now, in the last 2 weeks or so, it's flattened out a little bit, which maybe suggests that the core international buyers are getting their belly full. But keep a really close eye on that, because exports is the driver. I mean, we have this big corn crop in North America. Domestic demand, livestock numbers haven't gone up enough that we're going to feed a lot more of what we would consider the industrial market. So like wet millers, like Ingredion, those kinds of things. There's no more of that production out there. And so really the 2 big variables we have in corn are exports and ethanol. And exports is for sure the thing that's driving the market for us. So if I have corn to market, and I'm sure most of us on this call have corn to market, the thing to keep an eye on every week is the USDA releases export sales. And so I pinched this graph from FC Stone, but the blue bars are export sales per week for this marketing year. So the marketing year starts on the 1st of September, I think, and then goes along. But the piece you need to keep an eye on, there's a line superimposed on those blue bars, and that's the 3-year average for corn exports per week. And we have consistently through the late summer and fall stayed ahead of previous years' volumes in terms of export corn sales, or at least the North American continent has stayed ahead. And that tells us that our price isn't wrong, right? When you're selling commodities, really the only thing you have to differentiate yourself is price, right? It's like if there's 2 gas stations in Harrison, and I own one of them, and I don't know, somebody else owns the other one, right? If I got the price of gas at $1.05 and people are coming into my station, then $1.05 is the right price, and I can maybe even sneak it up. If people stop showing up to buy at my gas station, then I know it's cheaper somewhere else, right? So the fact that we can maintain these prices and exceed normal sales is really important. If we start seeing a trend here develop where the sales drops, then the price is going to have to go down to find the volume. So that's our signal. If we monitor export sales and we see export sales suddenly start to drop off, then it's time to start talking to our local grain elevator or grain dealer or whoever in the world we sell corn to and start making sales, because this thing right now is supported almost entirely by that export volume. The other big variable in the corn business these days is ethanol. And so this graph shows US ethanol production in terms of barrels per day since 2011. And ethanol has been extremely consistent since they brought in the 10% renewable fuel standard. What I want to draw your attention to is if you go over to the right-hand side of that chart, you see where it drops off like a cliff? That is mid-March of 2020. That's the COVID shutdown. And North America dropped from about 1,050,000 barrels of ethanol a day down to about 550,000 barrels of ethanol a day. So it cut almost in half, which means the amount of corn that it takes to make ethanol cut almost in half. And we bounced back most of the way back in the summertime, but we still haven't recovered up to where we were in terms of ethanol usage for the last 4 or 5 years. And that shouldn't be news to any of us, because strictly speaking, today's meeting should have been in a hall somewhere, and we all should have burned gasoline to get there, right? And it's just not happening yet. A week or so ago, they got up to 967,000 barrels a day, but you don't have to turn on the news for very long before you realize it's not apt to speed up. We need to keep a really close eye on that, because right now, if you follow the numbers across the bottom of the screen, it's the amount of ethanol the amount of corn that got used each year to make ethanol. And the USDA is forecasting more than 5 billion bushels of corn being used in ethanol in crop year 2020. And I'm doubtful that they're going to be able to pull that off. The USDA marketing year is from September 1st to August 31st. So in December here, we're already a quarter of the way through the marketing year. And we haven't even got back to 3/4 of average. So there's a possibility that everybody gets back in their cars and is driving around full speed, but maybe not till next spring. And so I expect at some point they're going to have to ratchet that number down. A little bit of good news if you're in Ontario. The Ontario provincial government just changed the renewable fuel standard. So where gasoline in Ontario used to be 10% ethanol, they're going to move it up to 15% ethanol. And so in terms of Ontario basis and in terms of Ontario corn consumption, that's pretty useful. If people burn 1/3 less gas, but there's 1/3 more ethanol in it, it might support our local corn market. That won't drive futures prices, but it'll be useful in terms of basis values to Ontario farmers. So what I would say, if we're monitoring the corn market in terms of making sales, the first thing is exports. As long as we can stay ahead on exports, this corn market stays strong. Like you probably saw, corn prices moved up really fast late October, early November. That's when the export sales were the hottest. We flattened off in the last couple of weeks. Corn prices themselves have flattened off in the last couple of weeks as well. It's kind of indicative, but we'll keep an eye on that. As long as those export sales can stay ahead, then there's more than enough demand there to eat up even a 14.5 billion bushel corn crop, and that's going to support the market. Ethanol, I think we're going to see a downward adjustment in that one. I wrote a newspaper article back in September when the USDA first came out with their estimates for the 2020 crop year and said they know something about public health that I don't, because I don't know how we're going to use that much corn. And so far, although I'd like things to get back to normal, it doesn't look like it's going to happen real quick. So really happy with the province's decision on changing the fuel standard. Conceivably, the Americans could do the same thing, but that ethanol number may have some trouble holding itself up. By the time we get past the Christmas holidays, like when we get into January, the key driver of the corn market is going to be acreage intentions for next year. So unless exports completely fall out of bed or something else happens, the corn market is going to have to buy some acres, because we'll talk about this later on, but planting intentions, if we grow another corn crop the size of this year's or slightly smaller, ending stocks are going to be tight. And so watch for that in the winter as well, that at some point the futures markets and new crop prices start trying to make us more interested in growing more acres of corn in the spring of 2021. If we get a bit of an auction sale in the commodities, that may create some really useful selling opportunities for us, but that's yet to unfold. In terms of, I'll move over to wheat, because the thing about the wheat business right now is that wheat is following corn. So the graph here is, I think, 10 or 12 years worth of, there's a very predictable ratio between the price of corn or futures, the corn futures and the soft red wheat futures. So not necessarily cash prices, but futures prices. And that's that soft red wheat is usually 1.5 times the price of corn. And the reason for that is because one of the major uses for wheat is livestock feed. And so the two crops are interchangeable in that segment. Wheat's worth more because it's higher in fermentable starch, and there's more bushels in a ton wheat. But that relationship, that mathematical relationship, stays pretty tight. And what we've seen here is that as long as the market stays hot for corn, it will pull wheat along with it. Back in September, and I assume most of us have sold some new crop wheat. I'll confess to having made a little bit of a mistake. And in September, we had wheat at about, it was a little more than 1.5 times the price of corn, and we were about to launch into what we thought was going to be a really big corn harvest. So, I booked some new crop wheat, and then by the time we got to the end of October, wheat had gone up, and it wasn't because there was anything fundamental that happened in the wheat market, but we saw that big takeoff in corn prices. So corn has been pulling wheat higher. So of course, what I did was sold more wheat. So it's going to be my agronomist's fault if I don't get a crop. But anyway, there is, and we'll get into this, but there's really no fundamental shortage of wheat. So the wheat pricing complex is all kind of riding around on corn right now. These are two charts from the last USDA report. The one of them is planted wheat acres. Now this report doesn't have their 2021 fall planting, and if you look at that chart on the left-hand side, it shows acres planted and acres harvested in the US. Indications are that there's about 2 million acres more winter wheat planted in the US right now than there was last year. And that makes pretty good sense, right? In September, the first thing that went up in price was wheat. And so the first crop that we got a chance to plant in the price rally was wheat. And we had a good open fall, right? Soybeans came off early, fields weren't muddy, soil conditions were good. And so a lot of wheat got planted. If you look at the chart on the right, gives you an idea of crop size. And certainly wheat's not particularly scarce. We've been trucking along with pretty adequate wheat stocks for a while. So adding another 2 million acres to that, there's just not a great likelihood that wheat is going to get scarce at any point. And so that's why I'm pointing out that I think using the strength in corn to hold up wheat prices or to give us a signal on how to market wheat is pretty important. Don't know how many of you guys pay attention to this, but one of the things I'm always fascinated by, if you look at that chart on the left with wheat acres, the Americans last year planted 30 million acres of wheat or winter wheat and harvested 23 million acres of winter wheat. So they lose almost a quarter of their winter wheat every year, which is horrifying. I mean, I'm not sure if they just have really bad winter kill or if in the spring the price of something else looks better and it gets smoked out with Roundup and a cultivator. Anyways, sort of summarize what's going on in terms of winter wheat. The US crop is about 2 million acres bigger. One of the things that's been supportive to the wheat market is that the biggest portion of that US winter wheat crop is actually hard red winter, and it's growing down in Kansas and Oklahoma, Colorado, down in what we'd call the Southwest states. And if you look at a drought monitor, the Palmer Drought Monitor Index map or something like that right now, it's extremely dry down there. We've seen all those wildfires in California and stuff. It's not great. And so about half of the US winter wheat acres is actually in areas that have significant soil moisture issues right now. Now, at the end of the day, that's hard red, and most of what gets grown up here is soft red. So it won't translate in terms of the cash prices when we get to harvest, but for right now, it's supporting the futures on new crop wheat because there's a bit of anxiety in the managed money, in the spec fund money. They're dialed in on the fact that there's some wheat in some really dry country. They're not good enough agronomists to know that hard red and soft red are different things. And there's way more liquidity in the Chicago wheat, which is the soft red futures, than there is in Kansas City, which is the hard red futures. And so they're helping us to support prices. That's an opportunity for us. The more they worry about that wheat crop, the better it's going to be for us going forward. In terms of how much wheat is planted in Ontario right now, so fall of 2020 plantings for 2021, most people that I talked to said that we have at least as much. And we'll find out from Agricor, because I think the reporting period for wheat acres is over now. We're going to find out really soon, but it's likely over 1 million acres. Ag Alert did a survey of customers earlier or in late November, and I think we'll probably see the results of that in today's Ag Alert newsletter. But they were suggesting that wheat planting is up about 10% from last year. Ontario's average yield for wheat last year was 83 bushels an acre. If we had that 1,000,005 or 1,050,000 acres of wheat, so that's 2.5 million tons of wheat in a market that grinds about 500 to 600,000 in the domestic flour mills. So lots of wheat around. Need to be a wee bit aggressive about marketing it. So here's my thoughts on marketing wheat. I made this chart, and it's just the wheat futures. So D's futures at 578, and then you move up in 587, I think, for March. What I want to point out that's really interesting is that the futures set up what we call a carry. So the furthest out futures is the highest, the nearby futures is the lowest. That is the way a futures market sits when there's lots of supply. And so what it really says is that it doesn't mean that wheat is worth more later. It means it's worth less now. The part that I think is curious for us as farmers to take a look at is that it's essentially the same price for May, July, and September. They're all around 590. And of course, July and September are new crop contracts, and May, to deliver May futures would be wheat coming out in April. So you would store it for 10 months to get the same price as if you just shipped it right out of the field, right? And that's a bit of a tell. That suggests that the market knows that there's lots and lots and lots of inventory, and that there's essentially no chance that we're going to run out of soft red wheat at the tail end of this crop marketing year. So if you're sitting on wheat in your bin and you're waiting for something exciting to happen, you probably want to hope that the exciting thing happens between now and Groundhog Day, because there's the futures market has a very clear expectation that at the end of the marketing year, there's just going to be wheat get pushed out. And the other thing I would say about wheat just in general is you never want to sell the spot market. So if we hit that high, say in January, there's a rally in wheat futures for some reason, that's a great time to sell stuff for delivery in March of like 22, right? Just way downfield, far as you can go. Always be selling as far ahead in that wheat business as you can. Now, moving over onto soybeans, and this is the engine that's driving the whole ship right now. This is U.S. soybean production for the 2020 crop year compared to previous years. It's at 4.1 billion bushels, and it's an okay sized crop, but it's not extremely big. It's bigger than last year, smaller than the 3 years before that. The acres just weren't there. Yield at 50 bushels an acre is okay, but this is just kind of it's a very average soybean crop that we're in. I think Ontario yields were really pretty good, but across most of the continent, nothing really to write home about. And so the supply of soybeans isn't super big. For Ontario producers, and I've used this slide before, so maybe people have seen this, but for Ontario producers, we make our living by being in the export market. Ontario produces pretty close to 4 million tons of soybeans. I think the numbers Stats Canada put out yesterday for Ontario is 3.9 million tons of production from last year. Our crusher plants, because they're in Hamilton, which is sort of on the border, and Windsor, which is sort of on the border, they bring American beans in. We bring about 300,000 tons of American soybeans into Ontario each year. We crush about a little over 1 million. We grow about 1 million tons of food grade beans. So that leaves more than 2 million. More than half of Ontario's soybeans have to get on a boat and leave. And if you grow IP soybeans, that 1 million tons of food grade soybeans, they got on a boat and leave too. So 3 out of every 4 soybeans grown in Ontario gets in a boat and leaves. And so our whole market is based on what the world market for soybeans looks like. The world market, Canada, I made this pie graph. Canada is 2% of the world soybean supply. So we really don't deserve to be on the graph, except we should fit ourselves in. But South America is far and away the biggest producer. And South America is having a tough go of it. This is worldwide soybean, this is from Hightower. Worldwide soybean production is the orange bars, and worldwide soybean consumption is the blue line. And so, you know, through years 2014 through 2018, the world was actually producing more soybeans than we were using. And so we were building surplus inventory stocks. And you probably saw that with price, right? 2017, 2018, pretty hard to get a really good price for soybeans because nobody was all that hard up. And then last year's crop was a nice bit smaller, and the world actually consumed more soybeans than it used. And this year's crop is not big enough to close the gap. So we've actually shrunk it. Here's another way of looking at it. You can see ending stocks of soybeans, both in North America, which is the blue line, or in the United States, which is the blue line, or worldwide, which is the orange line, is shrinking. And that has the world really pretty worried about where we're going to get soybeans. So this is the value of soybeans on a ship somewhere out in the world market. And like I said, if 3 out of every 4 soybeans in Ontario gets on a boat, this is pretty important to understand. And so what I would draw your attention to is just like that corn export sales chart, soybeans took off in September. Prices really, really went up fast. The different colored lines on the chart, the black one is Brazil, the orange line is American soybeans, and Argentina is blue. It's a little harder to see. One of the things that's really significant to draw your attention to is that right now, and really for the last 4 or 5 months, Brazilian soybeans have been worth about $40 US a ton more than American soybeans. So that's about $51 Canadian, or about $1.40 a bushel. So there's a huge premium on South American soybeans right now. And there's 2 reasons for that. One is it's North American harvest, so we have more beans to ship, and it's kind of mid-growing season in Brazil, so they have quite a few less soybeans to ship. And also that La Nina weather effect where, you know, they're not so sure about the crop in the field, so they're not too excited about making more sales right now. It's funny, farmers all around the world will do that, right? As soon as the crop in the field looks bad, the bin lids get really heavy. Nobody's going to open them up to ship anything. And so there's a bit of that going on. And the third thing that's going on is American soybeans are subject to a tariff going to China, and China is the biggest buyer in the world. So the Chinese market is a lot more interested in Brazilian soybeans, a lot less interested in American soybeans, and they express their degree of interest in terms of the prices they're going to pay. This is how much that Chinese participation in the North American soybean business is. So if you remember, it was March of 2018 when the US announced a bunch of tariffs on Chinese products coming to the United States, and then China retaliated with a bunch of tariffs on American things, not the least of which was soybeans. And so you can see where these 2 charts are from the USDA, and they compare. On the left-hand chart is exports from September 1st to October the 29th in those different years. So the left side is stuff that's actually loaded on a boat and gone. Stuff that's on the right-hand side is sales that are on the books that haven't shipped yet. And I just want to draw your attention to the red bars, because the red bars are China, right? Pre-tariff war, China was at 10 million tons of soybeans between September, or over the months of September, October. In 2018, it went to basically zero. And then in 2019, it came back a little bit. And this year, they're right back in there. They've actually bought more American soybeans than they had before the trade war started. And that's a really good sign. That's part of the engine that's driving soybean prices. You can see where they've bought, I think, about 14 million tons of soybeans already out of the US, and they have another 15 million bought that are on the books ready to go. So that's really, really significant. And here, just to put it in perspective, I grabbed these two charts, and they might require a little bit of explanation, but the one on the upper left is global soybean imports. So who buys soybeans out there in the world? And that green slice on the pie chart, this goes back to 1990. So it's 30 years worth of imports. China is the green slice. And you can see that in a world where about 140 million tons of soybeans get bought every year, China buys about 100 million of that. So they represent about 2/3, almost 2/3 of the world's soybean demand in terms of the export markets. If you add together what they grow and crush domestically and what they import, about 50% of the world's soybeans get used up in China. Then you've got the other Asian countries is the blue slice. So that's kind of your food grade beans going to places like Japan for tofu and those kinds of things. That's a pretty stable market. The lower chart on the right is who ships the beans. So not where do they go to, but where do they come from? And the yellow slice across the bottom is the United States, and you can see it's pretty level. And the kind of light blue, the dark blue, and the purple are Brazil, Argentina, and other South American countries. And so they represent the biggest portion of the supply. And that's why this weather situation that we're in right now with La Nina is a big deal. Like I said, China uses half of the world's soybeans. They have, for the last couple of years, relied more and more and more heavily on Brazil and Argentina as a source of supply. There's a couple of things going on. They bought less oil seeds in general, especially last year or over the course of the previous year and a half, because African swine fever had cut into their hog population. When you feed less pigs, you need less meal. You buy less Canadian canola and less American soybeans. So that situation seems to have resolved itself. They're back there buying pretty enthusiastically, and their demand is up, and there's some question about the quality of the South American crop. And so I think that, as much as anything else, has driven them back into the North American ports to buy stuff. But that if we're making decisions about soybeans, what'll drive the soybean market, first of all, if you look at cash prices over the last few weeks, an elevator in Ontario is in the high 14s, 14.70, 14.80 a bushel for 2020 crop soybeans, and a little less than $13 for 2021 crop beans. So that this is the market is preoccupied with the situation with old crop, right? It's $2 a bushel cheaper for new crop beans. That ties to this La Nina weather event. And so what that is that the surface temperature in the Pacific Ocean around the equator is cooler than normal this year. And it tends to be that when we get one of these La Nina weather events, South America, Brazil and Argentina